Group CEO Peter Clarke joins us exclusively here in our Hong Kong studio this morning. Good to see you, Peter. Now, you travel to the Asia Pacific 5 to 6 times, so hopefully we have better weather later on for you this weekend to enjoy. What about the world of hedge funds? What a start to 2012, the best start in 12 years. How do you see this year playing out, basically?
Well, as you said, it's been a good start. We're only a couple of months into the year, but it has been good. I mean, from my perspective, one of the great advantages has been that we've seen alpha generation. It's not just beta, it's not just market-driven, it's actually around some of the fundamental strategies that we execute.
Yeah, and you're here to visit your clients, oversee the operations. Do you feel that there's more money coming from the big sovereigns here in the Asia-Pacific, from institutions that want to give hedge funds their money once again?
Yeah, absolutely there is. I mean, they're looking for a degree of capital protection, they're looking for liquidity in uncertain markets, and most of them have the requirement to continue to deploy assets in markets. So yeah, there's a lot of interest.
Yeah, and what about investment of your assets here in the Asia Pacific? Is more of that cash coming here to this part of the world, or is it holding steady in the U.S., which seems to be consensus best market play this year?
It's coming here as well. We have specific emerging market funds, we have specific regional funds, and indeed we've just started a fund based here in Hong Kong to trade Asian equities. So our objective at Man actually is to bring the investment opportunity back to a region where we've long had a significant amount of clients.
Yeah, significant amount of clients. So talk to me about strategies right now. Are we moving away from the traditional long-short, or are there better strategies that consumers and customers want to buy up instead?
Well, in this environment, the equity long-short strategy is playing well. Certainly in 2012, after a more difficult 2011 for many, although actually we did well in long-short. Credit strategies appeal, commodity strategies appeal, and of course, perhaps more the retail investor than the institution is looking for yield.
Yeah.
But they're looking for capital protection with liquidity, and that is something which, over time, hedge funds have provided.
Talk to me about yields, because I really want to show you what's happening in the treasury markets. People have been talking about this. Obviously, I'm sure you've been talking to your clients about it, but some of the fastest moves I've seen in 10-year yields in a long time. I mean, we're up 30 basis points in 2 weeks. What does that say to you?
Well, that, I think, tells us something about the money that's going to be shifting into other strategies. So I see this as the beginning of a significant shift from bonds into equities and other strategies. And I think, ultimately, that's healthy. I think that's a sign of some people wanting to take risks and maybe taking a view that the treasury markets have played out in the short term, and actually a positive sign for the global economy.
Yeah, I know you're not a strategist yourself, you're CEO of a hedge fund, but do you have any predictions or indications when people say, if I give you my money today, how much will I get in a year's time?
In capital terms?
Well, yeah, in profit gains, yes.
Well, that's always a difficult one. I mean, what I would say is that over time, if you had invested in our products at a composite basis, you'd have been up about 12% over the last 15 years. So that's pretty good, with lower volatility than any single asset class.
Yeah.
So that's a healthy and obviously a pretty impressive return. But clearly, you need to be able to move assets as market cycles develop. And you know, one of the requirements is to stay liquid in these markets, to take those advantages.
Yeah, and there's also calls of transparency, or more transparency in the hedge fund sector itself. Let me just bring up 2 cases as of late. You know, MF Global, of course, went bust, and people are thinking, well, you know, how secure is my money if I give it to an institution like Man Group? And what about AIJ as well in Japan, where they basically lost about $2 billion worth of clients' cash?
Yeah. Well, one of the solutions in our world is to separate the investment management from the custodian of the assets. So we operate in managed accounts, where actually the client retains ownership of the assets, and we're simply the trading advisor to that asset pool. And in that sense, you can overcome some of the risks of fraud, for example. And also it provides third-party valuation around between the 3 parties, the manager, the custodian, and the client. So there are many ways of providing both transparency and some of those confidence issues around governance and security of assets.
Yeah, and Peter, talk to me about regulation, because you know, every bank that I've spoken to says you know, what's happening right now with government regulatory environments really hampers them and their profit margins. Does it benefit you, considering you have banks having to shut down their prop desks? Does it help the hedge fund industry, or does it hurt it as well?
It does a little of both, is the truth. I mean, it helps to the extent that there's less money chasing a finite return, but it also means some liquidities come out of markets. So we need to check that we're not over-trading in markets in terms of of liquidity, but broadly it's helpful for the investment management
Yeah.
industry. And also, of course, some talent's coming out of banks, and if
Yeah.
it comes our way, that's fantastic.
Wouldn't that be great, finding jobs at Man Group? Okay, one more question for you. We've been talking a lot about China. Obviously, you're here in the Asia Pacific, so people are probably asking you, what's going on in China? 7.5% growth forecast predicted this year. What do you say when people ask you about that big emerging space?
Well, it's a market we're already active in. We have clients there. I think personally it's realistic that they've reduced the growth forecast because it shows that they're cognizant of what's going on in the world. But China's got a huge amount of assets to deploy. They're a very important part of the global economy now. And they know that. And they want to move, in a measured and consistent way. And they've always done that. So I'm confident about China.
You're confident about China? Are you confident about Europe?
I'm more confident than I was about Europe 6 months ago. I think in Europe we've managed to contain a problem, not solve it. And so, and the markets appear to be maturing in the way that they're addressing that. So I think it's early days, but it's certainly positive in terms of some confidence coming back into the Eurozone market in particular.
Peter, pleasure to see you on this Friday morning.
Thank you very much.